Welcome to the wildest ride in financial history, the 1987 stock market crash. Picture the stock market as a massive amusement park, and everyone's lining up for the portfolio insurance roller coaster. It's 1987, stocks are soaring, and this ride promises to keep you safe no matter how crazy the drops get. But, spoiler alert, this roller coaster's about to go off the rails. Buckle up and let's dive into the chaos of Black Monday. So, what's this portfolio insurance ride all about? It's based on a super smart math model called Black Scholes. Imagine it as a genius plan to protect your money. Here's the deal, if the market starts to dip, traders could short sell, bet against the market, and increase their bets as it falls, like opening a bigger parachute. Pension funds managing billions loved this. They bought put options. Think of them as insurance policies to limit losses. It's like having a safety net under your roller coaster seat. Sounds foolproof, right? Well, hold that thought. In July 1987, the stock market was the hottest ticket in town. Companies were raking in cash because a weaker US dollar boosted exports. The roller coaster was climbing, and everyone was screaming with excitement. But there was a problem. Stocks were crazy overpriced compared to bonds. For every $20 you spent on stocks, you earned what $10 in bonds could get you. Yikes. Then on October 14th, a news bombshell hit: tax changes might kill corporate takeovers. Investors got nervous, and the roller coaster stopped at the top. Everyone looked down and thought, uh-oh. October 19th, 1987, Black Monday. The roller coaster takes a nosedive, and the Dow Jones crashes 508 points, 22.6%. That's the worst single-day drop ever. Here's why it went nuts. Everyone tried to jump off the ride by selling stocks and futures, bets on the market's future. Portfolio insurers dumped $1.3 billion in futures, nearly a third of the day's trading. But there was a huge glitch. When everyone sells, there are no buyers. It's like the whole park trying to squeeze through one tiny exit. The selling frenzy made prices drop faster, and the safety net, portfolio insurance, ripped apart, fueling the panic. As the market crashed, things got crazier. Traders called arbitrageurs, who usually balance stock and futures prices, got caught in a short squeeze. They just couldn't buy futures fast enough. The futures market briefly traded higher than stocks, which is like the roller coaster going backward. The NYSE's trading system, DOT, was totally swamped with sell orders, $140 million worth by 9:30 in the morning. Clearinghouses, which guarantee trades, were on the brink of a liquidity crisis, demanding $180 million in emergency cash. It was kinda like the amusement park running out of tickets and everyone was stuck in line. Not everyone got crushed. Bond traders at Salomon Brothers were actually partying as investors fled stocks for bonds, expecting lower interest rates. One lucky trader who bet against the S&P made $27 million in a single day. Talk about a jackpot. But broker-dealers stuck with mispriced derivatives got slammed. Gold, usually a safe haven, actually tanked as investors sold it to cover losses. Meanwhile, savvy folks like Salomon's CEO scooped up cheap stocks, which later bounced back. In this crash, some rode the roller coaster to riches, while others were left dizzy. So, what did we learn from this wild ride? Portfolio insurance, meant to protect, actually fueled the panic, like a safety net that breaks when everyone jumps on it. Circuit breakers, meant to pause trading, flopped because every exchange had different rules. Stocks, futures, and options were so linked that one falling dragged the others down. The crash showed that even the best math can't stop a stampede. But here's the good news. The market recovered, proving it's a roller coaster that always gets back on track. That's the story of the 1987 crash, a roller coaster ride that shook the world but taught us to hang on tight. Want more crazy financial tales? Hit that subscribe button, smash the like, and check out our playlist on market crashes. Let us know in the comments, would you ride the stock market roller coaster? See you next time.